Well, Cheryl, it's one of the sectors that will gain the most on the back of a return to normalcy. And of course, you have the reopening trades and all of the sectors that have been under the weather and that have not been able to get the revenues that they used to get on account of having been locked down. But really, one of the biggest beneficiaries is going to be the banking space, because a lot of the pressure that was building in the system was evident in the form of credit growth, which has been muted, and on account, and also on the non-performing asset side. Now, one could also argue that these banks have provisioned very aggressively, a lot of the large banks. They've raised capital, they've provisioned very aggressively in anticipation of a lot of delinquencies in the system. And if things pan out better than expected, a lot of these provisions will be written back over a period of time. So one could argue that the second half of this financial year, assuming that things improve substantially from this point, will be a very good second half for the banking sector in particular. Just on the back of what I was just saying, what is your reading of the banking system as a whole? Is that non-performing overhang not too much of an overhang, considering that they've provisioned so aggressively? And in fact, could you see that being a tailwind for them in the second half of this financial year?
Yeah, I think there are a couple of factors that are working, positive for banks. Like, for example, the government policies, like the bad bank that is being talked about today, that is absolutely, likely to come on stream. And, the big issue for the banks, especially the PSU, is the non-performing assets. And if they are able to reduce this by, say, securitization as is being proposed, that would be a big positive.
I want to come back to you, Shahina, on this whole argument for, say, SBI as the big name in the PSU banking space. A lot of people have called for a re-rating of this particular bank. What would you say in the context of the banking space as a whole? Would you go with SBI, saying that there's a tremendous potential for returns going forward, or would you stick with the large private sector banks in this context for a retail investor?
See, for a retail investor, if you are looking at PSU banks, the safest as of now would be SBI. One is because the valuations are very attractive. It is just about 1.2 times book, which is very attractive. And there are a lot of there are stress loan books that is likely to improve as and when there is a resolution on some of the larger stressed assets of the bank. So to an extent, you have some positive news coming on lowering of the net NPAs, as well as you have fundraising that has happened recently by the bank. This is actually keeping the cost of credit low. And on the other hand, we've seen that in the first quarter, the overall credit growth for the overall banking sector has been low, in lower single digits. But as we go ahead with the economy picking up, we are here, the estimated economy GDP growth is likely to be about 9.5% going forward, 1 year forward. This, I think, will have a very positive effect on the overall growth in credit for the banks, and it should have a very positive impact on the overall profitability of all private as well as public sector banks, and especially SBI in the public sector space should do reasonably well. Given all these factors, I think being a safe bet for a retail investor, I think it makes sense to, if you're looking at investing in PSU banks for the long term, to be in SBI. But having said that, I think the private sector has managed their asset book as well as in terms of the credit growth, they are gaining market share, because the rate of credit growth for most of the private sector banks has been on the higher single digit or double digit. So they are gaining market share. To an extent, they are able to manage their loan book and the net non-performing assets also better. NPAs, while have been stable, there may be some bit of a decline, if there is some deterioration in some of the retail loan book or SME loan book in the next 1 or 2 quarters, I think they're very well placed to actually bounce back stronger. And in terms of valuation also, in fact, my top bet would be an ICICI Bank, where if you see in valuation, it is not expensive. It is one of the cheapest private sector large banks, I would say. And if you're looking at a slightly more expensive but a very strong long-term bet, I would go with an HDFC Bank, where at 3 times price to book, it's still, I would say, reasonably priced. Considering that the CASA also ratio, if you saw in the last quarter, is improving substantially.
All right, so that is the view coming in from Shahina on the entire banking space, saying the top picks are ICICI Bank, HDFC Bank, as well as ICICI, as well as SBI Bank. So this is SBI rather. So those are Shahina's views coming in on the entire banking sector. But talking about banks and staying with the banks, we had spoken to market veteran Shankar Sharma, who's expressed his caution over banks as well as financials going forward. You also have Ramdev Agarwal, on the other hand, say that the PSU banks could be at a very early stage of earnings growth cycle. So listen in to both of those views.
Banks and financials are way on the higher side of the beam. They are not a great business by any stretch. And the one truthful guy, in that whole space is, Sanjeev Bajaj, and he has been cautious. He's told us that he's not seeing the kind of traction that the stock price appeared to have shown the rest of the market. There are challenges on the core business front, and I believe the Bajaj Group, they don't mince words, they don't try to manage stock prices. They are very honest in what they say. And therefore, if he says so, and he's obviously the marquee lender in the business, then I tend to believe that the real economy will still not support a large-scale credit growth. And which again, tells us that, and that's a big area where all the banks made money. Nobody made money by financing bridges and roads in India. I mean, everybody loses money doing that, which is the PSUs. So with that knowledge, I think the reversion to the mean will happen on the way down for the banks and financials.
I mean, PSU banks are just, they must be in, there's a very large segment of the market in India. It's a very unique kind of segment. You don't find it world over. But in India, it's a very large segment, PSU banks. That could be at a very early stage of the cycle, very early stage of the cycle. All the COVID hit companies, whether it is automotive, that could be at early stage of growth. Real estate could be early stage of growth.
All right, interesting points being made by those market veterans, but it has been an interesting conversation, Shahina, on banks. In fact, I'm pretty sure that a lot of our viewers tuning in on social media as well as on the television will have questions for you, and they can do so in the query segment, which will follow after this very short break. Okay, well, I preemptively called for a break. Let's, in fact, go back to Shahina. Shahina, I'm coming back to you. I had one more question on the banking space. And it's interesting that you mentioned ICICI Bank and HDFC Bank. Very quickly now, the battle I feel in these banking names is going to be on the digital front. And HDFC Bank has had a little bit of trouble on that technology front in the recent past. Do you think that that's a key overhang, or do you think that the bank will be able to get past that?
I think the bank will be able to get past it. It has got one of the best digital platforms, and there may be some issues, but I think, given the technology platform that they have and the strong team, I would think that this would be a short-term glitch. I don't think it's a major issue for the longer term.
All right, on that note, let's take a quick break. We'll be back on the other side with the query segment.